Hey guys, welcome to DevTech Finance, and in this video I would be talking about the profit and loss statements. So let's get started. Profit and loss statement is also known as income statement. So don't get confused, either we talk about income statement or profit and loss statement, both are actually the same. So, profit and loss statement is one of the financial statement. When we talk about a company's business, so all these stakeholders who are interested in knowing about the business, for example, you are an investor in that company, you are holding the shares of any company. Now you are interested in knowing that how is the financial position of the company going, how the company is doing, whether its business is running smoothly, how is its revenues, how what are the expenses, how the company is overall efficiency in managing its business. So how do you know about all these things? You consider the annual reports, you consider the financial statements of that company which is available for all the stakeholders. So one of those financial statement is profit and loss statement. So this is very important, and why it is important, because it shows you the company's financial position in terms of its revenues and expenses. And revenue and expenses are the two basis thing when you have to calculate the profit. It is a basic equation that profit is derived when you deduct the expenses out of the revenue. So see how important profit and loss statements be. You just get an idea about the company's profit, the company's overall performance for its whole accounting period. So this is why P&L statement is so important. You get what are the sources of revenues for those companies, how the expenses are happening. So all those ideas. Is the company efficient enough in managing its expenses? Is it efficient enough in increasing its revenue sources? When you make a comparison year to year wise, you get an idea how the financial graph of the company is growing. So many more important things. You can know all the details about the business performance of a company through a single simple financial statement, which is profit and loss statement. It generally derives the net income or loss for the period by deducting total expenses from total revenue. So it's a very basic formula. When you deduct the expenses out of the income, you arrive at either profit or loss. And this is what P&L statement shows when we are talking about a whole big organization. What are the revenues, what are the expenses, and what has been the profit? It categorizes the sources of revenues and reasons for expenses. So in details in the P&L statement, you can see what are the sources from where the income is coming and what are the sources where the expenses are incurring, where the expenses are going, how the money outflow is occurring, how the money inflow is occurring. So have a look at the format for profit and loss statement. This is a basic format where you can understand how the recording is done. So just on the basis of an assumed data, let us understand this format. So first we have taken revenue from operations, and then other income. Adding up this revenue from operations and other income, we arrived at total revenues. Okay, so this is how we start our P&L statement. We have to first consider the revenue sources. Revenue from operation is the core business activity from where the revenue is coming. So here I have mentioned 13 lakh rupees and other income is 20,000. In details, we would understand about all these categories in further slides. So just wait and keep patience. This is total revenues, which by adding revenue from operations and other income, we got 13,20,000. After you have mentioned all the revenues and calculated the total revenue, start mentioning the expenses. So just give a heading of expenses and write down all the expenses in whatever category you feel like. So material expenses, it could be the raw material expenses. Okay, so the raw material acquisition and whatever cost you have given to purchase those raw materials or those expenses, which is here 5 lakh rupees. The employee expenses 2,50,000, finance cost 20,000, selling and administration and miscellaneous expense 50,000, depreciation expense 20,000, other expenses 10,000, and thus we got on to the figure of total expenses, which is 8,50,000. I have shown this with red font to just indicate you this is our expenses. It is a negative figure, and here was our revenue, which was a positive figure in green, 13,20,000. So this is how a basic simple format you can follow for P&L statement. First you have to record the revenues, then you have to record all the expenses, and see, after you have calculated all the expenses, you just need to deduct those expenses from revenues, and you would arrive at the figure of 4,70,000. This would be profit before exceptional items and tax. So what could be the exceptional items? I would be talking this in such a way that exceptional items could be any loss due to any theft or damage, anything which is unexpected, which the company or business was not ready for. So any kind of expense, any kind of such expense occurs, any bad debts or something, then it is treated as exceptional items. And after deducting this exceptional items, here we have not taken any figure into consideration, just assuming that there was no exceptional items happened. Now profit before tax, we arrive at the figure of profit before tax, which is 4,70,000 yet. And then after paying the tax expenses, which is around 30% in this case, 1,41,000, after deducting this from profit before tax, we arrive at profit after tax. And this is our profit or loss for the period. This profit after tax you can call as net profit, net income, or profit or loss for the period, whatever you feel like. All are the synonyms. Either you consider it as net income, net profit, net loss, net profit or loss for the period, whatever. So here in this case we arrived at the figure of 3,29,000, which is profit for the business. So this is how you can create a P&L statement for any of the company, having a look at all its expenses and revenues, and thus you can arrive at the profit. And what this profit indicates the efficiency of the business in managing its expenses and in generating revenues. Thus P&L statement is very important. Let's have a look. What happens with this profit then? We arrived at the end figure of net profit. So this net profit is either distributed as dividend or is kept as retained earning, or it may be some portion distributed as the dividend and some portion may be kept as retained earnings. So this is how net profit is treated, because retained earning is kept to invest again in the business to make it more profitable for new opportunities, or the company may decide to provide dividend to the shareholders to keep the shareholders happy and to value their existence in the company's investment, in the company's financial position. And thus this net profit plays an important role. Higher would be the profit, better would be the company in managing its shareholders as well as creating its business opportunities and growth. Let's have a look at the components which we have seen in the format for P&L statement. So first was revenue from operations, which represents the revenue from sale of product and services. Okay, so this revenue is the main core activity. So if you are having a retail business and you are selling clothes, so whatever revenue you would be earning by selling of those clothes, selling of those merchandise, that would be considered as the main source of your revenue from operations. So this is from the main operational activity. But when we talk about financial companies, this revenue may be in the form of interest or financial services, because for the financial companies, that is the main source of revenue. They are not selling any product, but they may provide services and they are earning some kind of interest, which becomes the main core business activity of those financial companies, and thus that is treated as revenue from operations. Now, other income could consist of income from interest, except for financial companies. Why is here I have written except for financial companies? Because as you have seen, when we are talking about interest and when we are talking about financial companies, that would be the main source of revenue. So it won't be considered under the category of other income. So other income may be in the form of interest for other companies, not non-financial companies. It may be net gain or loss on sale of investment. So any investment if the business has made and it has sold that investment and earned profit out of it or loss out of it, that would be considered as the other income. Then dividend income may also be considered as a part of other income if dividend is being get because the business has invested in purchasing shares of any other company or any other non-operating income. So any such incomes could be categorized under the other income category. Let's have a look at the expenses. It is the cost incurred in the course of business resulting in the outflow of money. So expenses are generally the outflow of money. So whatever cost is being incurred in the course of business which is resulting in outflow of the amount, that is considered as expenses. So expenses, we saw that we categorized under various headings like material expense. What was material expense? It was the cost of raw materials being consumed in the production process. So to start any production, you must have a stock of raw materials which is sent through the production process, and then that is converted into finished goods. So this is how material expenses comes into existence, because to purchase those raw materials you must have paid some amount, and that amount, that cost which you incurred, is material expense. Let's have a look at the finance cost. It includes the interest and other borrowing expenses. So if there is any interest or any other borrowing expenses, it is also a kind of finance cost. So the business has taken some borrowings, now it is paying interest. So that interest expense would be considered as financing cost because it has used its money in financing purpose in the form of borrowing from any bank or any financial institution. Then there is employee expenses. It consists of salaries, provident fund, welfare expenses, pensions, and all those things. So that would come under the employee expenses. Then there is depreciation expense. It is the amount deducted as an expense with uses of fixed asset losing its value over lifetime. So you must be aware that in accounting we read depreciation is what we deduct as a fixed amount because the machine being used over a longer period of time is losing its value for its life. If for say a machine, its lifetime is 10 years and it was acquired at 1 lakh rupees, so over those 10 period of times it would be losing its value in terms of its money, in terms of its utilization, and thus a depreciation expenses created to manage that. Selling and distribution expense. It includes expenses like sales commission, advertising, promotional costs, transportation costs, salaries of sales personnel, etc. So there are various kind of expenses when we talk about an organization, when we talk about a big business. So one such expense is also selling and distribution. After your finished product is ready, you need to sell it, you need to distribute it. So transportation cost occurs, advertisement cost occurs, and all those costs together goes under the heading of selling and distribution expense. Talking about the provisions, some provisions are also created which are treated as expense in P&L statement. So these provisions may be created to meet any unexpected obligation or demand, which may be like sales allowance, any discount need to be provided, or any bad debt occurred, pensions which need to be provided, the audit expenses which occurs yearly. So all those expenses which are unexpected and which is incurred, a provision is created so that it can be served and any kind of hindrance doesn't come into the business process. Okay, so this was all about this video on P&L statement. I hope you like this video. Thank you for watching, and if you like, do like and share my videos, and don't forget to subscribe to my channel DevTech Finance. Thank you all.